3 years ago, I sat in my car in a parking lot outside a bank, staring at an account balance that used to have 5 figures in it. Now it had 3. And I remember thinking the strangest thought. Not, I need a better strategy. Not, I need to learn a new indicator. The thought was, I don't think I actually know why I do anything I do. That sentence is the whole video. Stay with me, because what I'm about to walk you through isn't a strategy. It's not a setup, not an indicator, not a system you can screenshot and forget by Thursday. It's the one shift in how I thought about trading that did more for my results than every course, every mentor, every strategy I ever paid for combined. And I paid for a lot of them. I'm not going to tell you what it is yet. I'm going to show you, because if I just say the sentence, you'll nod, you'll agree, and you'll go right back to doing exactly what you were doing before you clicked this video. That's what happened to me the first 11 times I heard it. I need you to actually feel this one, not just hear it. So let's go back to the parking lot. At that point, I'd been trading for 2 years. I had 4 broken accounts behind me, roughly $60,000 total, and a spreadsheet with 11 different strategies I'd tried, ranked by how spectacularly each one had failed. I wasn't lazy. I wasn't stupid. I have a degree in engineering. I was, by every normal measure, exactly the kind of person who should have been good at this. Logical, disciplined at my job, capable of learning complicated systems. None of that mattered. None of it transferred. And here's the part that took me the longest to admit. I didn't fail because I lacked a good strategy. I had good strategies. I had strategies that on paper backtested beautifully. I failed because every single time price moved against me, some other version of me showed up to make the decision. Not the calm version who built the plan the night before. A different one. Scared, certain everything was about to go to zero. That version didn't care what the plan said. It's not intelligence. It's not lack of information. It's not that you haven't found the right course yet. The real problem is that you've been trying to fix a psychological leak with a technical patch, and it has never once worked for anyone, ever. Let me show you what I mean with 2 people, because until I saw this contrast play out in front of me, I didn't believe it either. There was a guy in one of the trading communities I was in. Let's call him David, because that was actually close to his real name, and he won't mind. David was sharp. Former quant analyst, laid off during a round of cuts, decided trading was going to be his next chapter. He built a chart that had 40-something indicators on it. MACD, RSI, 3 different moving average clusters, Fibonacci retracements stacked on Fibonacci extensions, volume profile, order flow footprint charts, a custom script he wrote himself that scored confluence out of 100. He called it his edge. He talked about it like it was a person he'd built from spare parts, which, honestly, it kind of was. David took every trade only when his confluence score hit above 80. Sounds disciplined, right? Here's what actually happened. When a trade went against him, he didn't exit. He recalculated. He'd rerun the confluence score mid-trade, find some reason the number had shifted, and use that as permission to hold longer. He wasn't trading a system. He was using a very expensive, very intelligent-looking machine to negotiate with his own fear in real time. He blew through 2 accounts in 8 months, a little over $40,000. And to this day, he'll tell you the market is rigged, that retail can't win against institutional order flow, that the game is fixed. He needed it to be fixed. Because the alternative, that the 40 indicator chart was never the problem, that he was the problem wearing a very smart disguise, was too much to sit with. Then there was Maria. Maria drove for a rideshare app and traded on the side. Learned everything from free YouTube videos, no formal background in markets at all. Her entire system was 4 rules. She only traded 1 setup. She risked the same tiny percentage every single time, no exceptions. She had a hard stop that she placed the second she entered, not after. And she didn't look at her account balance during market hours, not once, because she said watching the number made her want to argue with it. Maria's trades were boring. She'd tell you that herself. Small wins, small losses, nothing dramatic, nothing you'd want to post a screenshot of. But 18 months in, she was up consistently, quarter over quarter. Not because her system was smarter than David's. It was objectively less sophisticated. She won because there was no version of Maria available mid-trade to renegotiate the plan. She'd already decided, in advance, exactly what she'd do in every scenario that mattered, and by the time the scenario showed up, there was nothing left to decide. Nothing left for fear to grab onto. That's the contrast. Same market, same volatility, same 24 hours in the day. One of them built a machine to manage uncertainty. The other, one built a version of herself that didn't need to. I want to be fair to David here, because for a long time, I was David. I had his chart, more or less, different indicators, same disease. And I think the reason his story stings is that it doesn't feel like a failure of effort. It feels like a failure of effort. He worked harder than almost anyone I've met. That's what makes this so brutal to accept. The harder you work on the wrong layer of the problem, the further away you get from fixing it. So what was the actual shift? Not the strategy, the identity underneath it. For 2 years, I thought of myself as someone trying to predict the market. That was the job description I'd given myself without realizing it. Predict, then act. Read the chart, form a conviction, place the trade based on how confident that conviction felt. And confidence, it turns out, is not information. Confidence is just a feeling, and feelings are the least reliable data source available to a person holding a live position. The shift was this. I stopped trying to be right about what the market would do next. I started trying to be someone who executes a plan regardless of what the market does next. Read that again, because it sounds almost identical to the first version, and it is not the same thing at all. One is about predicting an outcome. The other is about controlling a behavior. You cannot control what price does in the next 4 minutes. You can, with practice, control what you do in the next 4 minutes. That is the entire trade you actually have access to making. I didn't believe this the first time I heard someone say it either. It sounded like a fortune cookie. Control what you can control. Thanks. Very helpful. Next slide. But here's what changed my mind. I started tracking 2 separate numbers instead of 1. Most traders track profit and loss. That's it. That's the only scoreboard they've got. I added a second number. Did I follow my own rules? Yes or no, on every single trade, independent of whether that trade won or lost. Within about 6 weeks, something uncomfortable showed up in that second column. I was losing on trades where I'd followed my rules perfectly. And I was winning on trades where I hadn't followed them at all, where I'd sized up out of excitement or held past my stop because it felt like it was about to turn. The wins from broken rules felt fantastic. They also, over a long enough sample, were quietly training me to keep breaking the rules. Because the brain doesn't average outcomes over 300 trades. It remembers the one time you got away with it. That is the actual villain in this story, not complexity. Not a lack of edge, it's what I started calling the outcome trap. The habit of judging a decision by how it turned out, instead of by whether it was the right decision, given what you knew at the time. The outcome trap feels like learning. It is the opposite of learning. It's a slot machine training your brain to associate broken discipline with reward, one lucky trade at a time, until the 11th time it doesn't work and it costs you the whole account. I want to pause on that for a second because it explains something that used to confuse me about my own results. I'd have a great week, feel like I'd finally cracked it, and then the following week I'd give it all back, and more. I used to think that meant my system was inconsistent. It wasn't the system. It was that a winning week convinced me I'd earned the right to stop following the plan, and a losing week convinced me the plan needed to be more complicated. Both of those reactions come from the same place. Both of them are the outcome trap, wearing a different mask. The market doesn't know or care that you just had a good week. It resets to 0 every single time you open a new position, and the moment you forget that, you start trading your recent memory instead of trading the chart in front of you. There's a version of this that shows up even in traders who consider themselves disciplined, and it's worth naming separately because it fooled me for the longest. Call it the almost rule. You have a rule, technically. You just leave yourself a little room around the edges. Your stop is around this level. Your position size is roughly this percentage. Your entry criteria includes or something close to it. Each one of those soft edges feels harmless in isolation. Together, they mean you never actually have a rule at all. You have a suggestion, and suggestions don't hold up against fear. Only hard, specific, boring numbers do. The day I removed every around and roughly from my written plan was the day my results actually started to stabilize, months before the bigger identity shift fully landed. The precision wasn't about being rigid for its own sake. It was about removing every place where fear could squeeze through a crack and call itself judgment. Once I saw that, I couldn't unsee it, and it forced 4 smaller shifts underneath the big one. Let me walk through each of them because the identity shift alone is not enough. It needs a scaffold, or it evaporates by Tuesday. The first was what I'll call pre-deciding. Before the market opens, before I'm anywhere near a live position, I write down exactly what I'll do in every scenario I can reasonably expect. Where I get in, where I get out if it goes wrong. Where I take partial profit if it goes right. What I do if it goes sideways for an hour. All of it, decided in advance, in the calmest version of me that exists. The one sitting at a kitchen table with coffee. Not the one watching a red candle eat through their account in real time. The market never gets to negotiate with that version of me, because that version already left the building by the time the trade is live. I remember the first trade where this actually held. A position moved against me hard, fast, the kind of move that used to send me straight into recalculating everything on the fly. And instead, I looked at my own note from the night before, which just said, if it hits this level, you're out. No discussion. There was nothing to discuss. The decision had already been made by someone calmer than the person currently watching the screen, and all I had to do was let her win the argument. That's a strange sentence to say out loud, that I had to let an earlier version of myself win an argument with the current one, but that is genuinely what discipline turned out to feel like in practice. Not willpower, delegation to a calmer self. The second shift was what a mentor of mine, much later, called the 20-minute rule. Though I built a version of it myself before I ever heard it named. Anytime I feel the urge to deviate from the plan mid-trade, any urge at all to move a stop, add size, or exit early out of nerves, I am not allowed to act on it for 20 minutes. Not forbidden forever. Just delayed, almost every single time, by minute 15, the urge has lost most of its grip. It turns out panic has a half-life. You just have to outlast it instead of obeying it. The third shift was cutting my information intake by roughly 80%. I used to have 6 chat rooms open, 4 news feeds, a Twitter list of smart money accounts, and I told myself this was diligence. It wasn't diligence, it was noise dressed up as research, and every extra opinion I let into my head became one more voice available to argue me out of my own plan at the worst possible moment. The 95% chase more information because more information feels like more control. The 5% chase less information because they've realized that the plan was never missing a data point. It was missing a spine. The fourth shift was probably the hardest, and it was accepting a much lower ceiling on excitement in exchange for a much higher floor on consistency. I had to stop trading like every session was supposed to feel like something. Some of the best months I've had were, emotionally, almost nothing. Small, repeated, unremarkable decisions executed the same way whether I was up or down for the week. If you need trading to feel thrilling for it to feel worth doing, you have accidentally built a system that requires you to take on risk you don't need, just to manufacture a feeling that has nothing to do with your account growing. I had to sit with a particular discomfort here, one nobody warns you about. Trading well, for me, felt for a while like grieving a version of myself I'd been attached to. The version who found patterns nobody else saw. Who called the top, called the bottom, felt like a genius for an afternoon. Giving that up for a smaller, quieter, more repetitive process felt like a demotion, even while my account was doing better than it ever had under the exciting version. That's worth naming, because if you go looking for this shift expecting it to feel like a victory lap, you may talk yourself out of it the first time it just feels like less. Less excitement is the price. Consistency is what you're buying with it. Here's where I need to be honest with you about something most videos in this space won't tell you. None of these 4 shifts are impressive. If I described them to you without the story, you'd think, that's it? Write a plan, wait 20 minutes before you panic, watch less news, expect to be bored? That's the secret? Yes, that is the secret, and the fact that it sounds unimpressive is exactly why almost nobody does it. We are, all of us, drawn toward solutions that feel proportional to the size of the problem. Trading feels like a huge, high-stakes, complicated problem, so surely the answer has to be equally complicated. It isn't. The market doesn't care how sophisticated your solution looks. It only cares whether you can execute the same sound decision 500 times in a row without an emotional exception. I think this is the part people resist the most. So let me say it plainly. If your trading feels exciting right now, that isn't a sign you're doing well. It's usually a sign you're underplanned and overexposed, and your nervous system is filling in the gap with adrenaline. The traders who've actually made it to the other side of this will tell you, almost universally, that their trading got boring right around the time it got profitable. Boredom isn't the absence of skill. Boredom is what skill looks like once the fear has nothing left to attach to. I want to go back to David and Maria for a second, because I ran into both of them again more recently, and the update matters. David eventually stepped away from active trading altogether, not because the market beat him in some final dramatic account-blowing event, but quietly, the way most people actually quit. He still believes, genuinely, that the game is rigged against retail traders. And to be fair to him, there are real structural disadvantages retail traders face. But the account statements tell a more specific story than the game is rigged. They show someone renegotiating his own stop loss 40, 50 times a month. That's not a market structure problem. That's the outcome trap. Running on a loop, dressed up in 40 indicators. Maria is still driving rideshare on the weekends, by the way. Not because she has to, but because she likes the people. Her trading account has grown slowly, unglamorously, for going on 3 years now. She still won't watch it during market hours. When I asked her recently what she thinks her edge actually is, she said something I wrote down word for word. I don't have an edge. I have a rule I don't break. That's the whole philosophy, delivered by someone who never once called herself a trader with a capital T. She just kept doing the boring thing. So here's where this leaves you. Watching this, probably somewhere in your own version of that parking lot, even if you haven't hit it yet. You have a choice that has nothing to do with which strategy you pick next. You can keep upgrading the machine, add an indicator, join another community, buy the course that promises the missing piece, or you can do the much less glamorous thing, which is sit down, write out exactly what you'll do in every scenario before you're in it, hold yourself to a second scoreboard that has nothing to do with profit and loss, and accept that the version of this that actually works is going to feel, for a long stretch, like almost nothing is happening. I'm not going to tell you that's easy, because it isn't, and I'm not going to pretend the shift happened for me in one dramatic afternoon. It took months of catching myself back in the outcome trap, writing plans I didn't follow, promising myself next time more times than I want to admit. The difference is I kept the second scoreboard running anyway, even when I hated what it showed me. That's really the only mechanism there is. Not motivation, not belief, just a small, unglamorous system for catching yourself over and over, until the version of you that shows up mid-trade is the same one who built the plan the night before. If you take one thing from this, let it be the question I now ask myself before every single trade, the one that replaced, am I right about this? The question is simply, which version of me is about to make this decision? If the honest answer is the calm one from the night before, I take the trade. If the honest answer is the scared one staring at a red candle, I don't, no matter how good the reasoning sounds in the moment, because that reasoning was never really about the market. It was fear, wearing logic as a disguise. The same way David's 40 indicators were fear wearing a spreadsheet. Same charts, same market, same 24 hours everyone else gets. The difference was never the strategy sitting on top. It was which version of me showed up to execute it. That's the whole video. Everything else is decoration.